Hey there, guys. Good day once again, and welcome back to our YouTube channel. This is Ola from the Wolf Cartel, formerly known as Cryptechs, but this is the Wolf Cartel Traders. And today, I'm going to be taking you a quick one on types of charts and candlesticks anatomy, right? There are three main types of chart I want to show you. First of all, I'd like to show you the line chart. Basically, in this line chart, price point is represented by a dot. As you can see over here, a dot represents the price point, right? As you can see just right here, there's a dot that represents the price point, basically. Now, the x and y axis generally on your chart have the same thing. On the x axis, which is this lower line right here, it represents time and scale. Meanwhile, the y axis represents price, right? Generally, that's what you see. Now, the line chart, basically, we don't use it that much, because it doesn't have the details we need to do our technical analysis and the likes, right? So we basically don't use it that much, unless we're doing some HFX, high frequency trading, right? Do you understand? So, but you can see the basics here. You can see things like a little support right here, right? Or some resistance and ranging over here, right? But yeah, aside from that, we don't really use the line chart that much. Another chart I want us to go straight into is the bar charts. The bar charts almost look like the candlestick chart, but they are not candlesticks. But these are more detailed than the line charts. If you can see, they also have openings, closings, highs, and lows, just like the candlesticks, but they are not candlesticks, they are bars, because you can't really see a candlestick formation here for those that know what candlestick formations are like already, right? But they are more detailed than our line chart, right? If you think about it, they're more detailed than the line chart, because they still have something that we're looking at, unlike just looking at a dot moving around, right? Yeah, then the part that we want to focus on the most right now is the candlestick chart pattern, right? The candlestick chart, this candlestick chart. Okay, the concept of candlestick charts came from Japan, right? And that's why we call them the Japanese candlestick charts, right? And this is the most popular form of chart representation that we know. This is the most versatile and popular form of chart representation. Price behavior during each time unit is represented in form of a candle. Notice this. Price behavior during each time unit is represented in form of a candle. What do I mean by that? It means that each of these candlesticks represent a time unit. This particular candlestick here, the last candlestick we see right here, represents a time. It's going to last for a time, and as you can see at the side right here, this bar right here, you can see $118, right? Underneath it, you see a time counting down. That's the time for that candlestick to end, right? Now, how do we know what time that candlestick represents? It all depends on what time frame on your chart you are on, right? Like for example, this chart we're on right now, we're on the 1 hour chart. So it means that each of these candlesticks we see right here represent 1 hour. What does that mean? It means that the time it took for this candlestick to form, for price to do the things it's going to do, basically moving up, moving down, ranging, or whatever it was going to do, it took 1 hour for each of these candlesticks to 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 be formed, right? It means that each of these candlesticks were giving birth to and only lived for 1 hour. And after that, they became history, they became generation, they became things we could study and use to forecast the market, in the future, basically, right? We could change the time frame to say the 4 hour time frame, which this is my favorite time frame, by the way, right? And we can see the difference, right? You can see the difference in the candlestick patterns on the same chart, on the same pair, which is the AVI USDT right now, right? But we can see the different candlesticks, the changes, right, from the 1 hour chart that we were on before. This means that in this particular chart, right, the time for each one of the candlesticks is 4 hours. It means that from the time each of these candlesticks came to be and the time they died, basically, let's use it like that, it took them 4 hours. So they lived a lifespan of 4 hours, right? They took time to form in 4 hours, right? So yeah, that is that for that. Now let's go straight into anatomy of candlesticks. Let's understand the anatomy of candlesticks. We're going to pick two candlesticks here, of which we're going to sit down and study and understand the anatomy. Let's know the body parts of our candlesticks, right? I will be picking these two candlesticks right here. They look juicy. Let me see. This candlesticks right here. These two candlesticks right here, right? They look juicy. One of this is our bullish candlestick. The other is our bearish candlestick, right? The other is our bearish candlestick. This bearish. My bearish candlestick here is the black with the red edges. My bullish candlestick is the yellow with the green edges, right? Now, generally, most the green candlesticks represent the bullish and the red candlesticks represent the bearish. Now, what do I mean by bullish? I mean that bullish basically means when the market is going upward, when it's going in an upward direction. Do you understand? And Bearish basically means when the market is going in a downward direction. That's when you say price is pumping, you are saying that it is bullish. When you are saying price is dumping, then you are saying it is bearish, right? So bearish candlesticks, which is dumping price or dumping candlesticks, are represented generally with red, and pumping candlesticks are represented generally with green. But here you can see a touch of yellow and black into my candlesticks because TradingView gives me the opportunity to, customize it the way I like it, right? But I understand, and it's easy to still understand because I have the red around bearish candlestick. You can see it around it, and I have the green around the bullish candlestick. So let's quickly break this candlesticks down a bit. Quickly. Now let's start with our bullish candlestick. There are 6 things I want you to know, right? There are 6 things I want you to know from these candlesticks. There are 6 major things on a candlestick. We have the body, we have the wicks, we have the opening price, the closing price, the high price, and the lowest price. We have the body, we have the wicks, we have the opening price, the closing price, the highest price, and the lowest price, right? Now I'm going to show you. Now let's start with our bullish candlestick, right? Now this bullish candlestick has a body, which you can see this yellow part from here to here looks like a body, which that is the body. Then we have the wicks. Focus on my horizontal line, this horizontal line here. The wicks is this, from this point to this point. You see this tiny line on this our bullish candlestick. You see that tiny line right there, and this tiny line from here to here right there at the top of it. That is what we call the wick, right? Now, what price did this candlestick open when it first opened for the first second of its life, right? And at what price did it close when it was done with its time? Now, in this case, we're talking about the 4 hour because why? We're on the 4 hour time frame, right? So now, within the 4 hours of the existence of this our bullish candlestick here, it opened at a price, it closed at a price. So its first second in life opened at a particular price, and its last seconds after 4 hours closed at a particular price. But during its lifetime in 4 hours, it had the highest point it got to, and it had the lowest point it got to, right? So now, how do we identify that? Now, since this is a bullish candlestick, we know that bullish means that price went up. So we're expecting that when the price opened and where the price closed is different, right? And then it means that the closing price is higher than the opening price. So we know that here, this lower place here, focus on this horizontal line here, this lower place here is the opening price, is the opening price or the open of this candlestick. And this top here, right here where it closed, right here is the close of, or the closing price of this candlestick. Now the highest price is the top of this wick, just right here. Focus on that horizontal line, the top of this wick, just right here. And the lowest price is the bottom of this wick, just right there. So it means that the 4 hours that this candlestick used to exist, it came from here, opened up here, it moved around, it moved around, it lived his life, maybe came down a bit, felt low at the time in his life, came down to this week right here, then it went up again and then was feeling too good, felt all right, and then got to his highest point in life where he felt like he has achieved a lot, and then maybe just before he died, he just relaxed a bit and was like, okay, I think I should take a chill pill. I have lived life, right? And then closed around here. So opening and it closes here. This is the lowest point, the bottom of the week here, and this is the highest point, right? Now let's focus on the bearish engulf on this bearish candlestick, right? Now this bearish candlestick right here. Now the bearish candlestick has basically the same thing that that a bullish candlestick has. The only difference is the opening and closing. Take note again, a bearish candlestick has the same things that a bullish candlestick has. The only difference is the opening and the closing price, right? So what that means is it has a body, which we can see here. This black space here is the body. It has wicks, which are this tiny red, focus on my horizontal line, these tiny red lines here and right here, right? Okay, and then it has opening, closing, highest and lowest price. Now the lowest price stays the same, the bottom of this wick here is the lowest price, the highest price stays the same, the top of this wick here is the highest price, right? The top of this wick here is the highest price. Now the opening price is going to be different. Now bearish, we know that means that the market went down, so it means that the price at which the market opened is higher than the price at which the market closed. The price at which the market closed is lower than the price at which the market opened. So if the market opened at $2, it means it most likely closed at maybe 1 point something dollars, because that's lower than $2, and that is a bearish movement, right? So now this bearish candlestick obviously opened at the top right here. It started his life right here. His first second of life started right here. Maybe it even went up immediately. It started life and felt big, like, oh, I'm about to do this life thing, right? And then within that 4 hours, a few things in life humbled it and made it realize that I'm life. I'm gonna do you bad, right? And then it came down all the way to this lowest point of his life. And then just tried and was like, no, life is not going to knock me down. I'm going to work hard for it. It got some motivation and then pushed, but it couldn't push to meet up with where he started from, but he just pushed a little bit further and closed right here. So what did he do? Opened here, got to this highest point, came to this lowest point, and then closed back right here. So yeah, that's basically it about the anatomy of candlesticks. I hope you learned something. If you love this video, please subscribe to our YouTube channel. Wait for more. We have more coming for you. We have chart patterns coming, candlestick patterns coming, explaining all these things to you and breaking it down, going to explain support, resistance, trend lines, and the likes, explain all these things to you. And yeah, check the link down below in the description box. You'll see a link to our Telegram channel. You can as well join for free signals, for more tutorials. We have a package, a free zip package full of PDF files for you to read and understand the market better and aid you, right? And yeah, that'll be it for now. I'll see you in our next video. God bless you.